There's going to be a dot-com bust 2.0, and as you will know, we had forecast that back in 1999. We said in the Trends Journal, in what used to be, now it's a weekly, it was a quarterly back then, that it'll bust by the second quarter of 2000. Same thing we're saying right now. There's going to be a bust by the second quarter of 2000, if not earlier. Of 2026. And when those markets go down, you're going to see gold and silver prices spike, even as they're spiking now.
Gerald Celente argues that the world is moving toward a dangerous convergence of financial excess, technological hype, and political desperation. In his view, the current obsession with artificial intelligence mirrors the late 1990s internet frenzy, where excitement races far ahead of real economic value. Celente warns that this dot-com bust 2.0 is forming beneath the surface, fueled by speculative capital, inflated equity markets, and the belief that a new technology alone can justify limitless valuations. When that confidence breaks, as he expects it to by 2026, the fallout will not be confined to stocks. Historically, such market collapses trigger aggressive monetary responses, pushing investors toward hard assets as trust in paper wealth erodes. From a monetary standpoint, Celente sees the dollar on a steady path of decline, driven not by foreign competition, but by domestic policy choices. Repeated interest rate cuts, emergency stimulus, and political spending programs weaken purchasing power over time, even when markets appear calm on the surface. He emphasizes that governments rarely choose discipline when markets falter. Instead, they opt for easier money and financial repression. In that environment, gold and silver tend to reassert their role as monetary anchors, rising not because of speculation, but because currencies are quietly losing value. For Gerald Celente, this relationship is mechanical, not ideological. Weaker dollars historically translate into stronger precious metals. Looking forward, Gerald Celente also ties rising geopolitical tension and expanding conflict into this financial equation. He believes wars, whether kinetic, cyber, or economic, are increasingly used to distract from internal failures while justifying inflationary policies and system overhauls. As trust breaks down, he warns that new financial mechanisms branded as stable or innovative may simply centralize control rather than protect freedom. Against this backdrop, Celente views gold and silver as forms of personal sovereignty, assets that sit outside political promises and digital experiments. His message is blunt. When systems reset, those who prepared early preserve purchasing power, while those who trusted the narrative pay the price. Now, we present the clips from Celente's interview with Lynette Zang. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
I don't carry a phone, and I only have a flip phone, and maybe I made 10 calls this year, if that many.
Ooh,
no, the
that
Gen
sounds
Z,
like
they're
fun.
totally, again, I write about it every week, they're totally AI addicted, totally high-tech addicted. And they're going to go digital because they're going to come out, digital, central bank digital currencies. Hey, we got a new coin, and it's worth more than $1. They'll make up some crap.
Right.
And
Here,
then
do
they
this,
want
all
to know
this
every
free.
penny you spent, what you spent it on, where you spent it, mostly important so they could get what they call tax money. And it's not taxes, it's thievery.
Yes.
Pure out thievery. And it's not taxes. They want your money because these little slime balls that people call politicians don't want to work. They want to have a great life with your dough.
Right.
End of story. And they're going to do it all over. And this is very important. A big trend that we're forecasting, and they're just starting to talk about it. Go back to your Trends Journal cover, February 5th of this year. .com bust 2.0. Trends are born, they grow, they mature, reach old age, and die. AI was only born to the public 3 years ago. You don't invest all your dough in the infant currency, the infant companies that are inventing this new AI. Go back 25 years ago. Some 10% of Chinese 18-year-olds were going to college back then. Now, nearly 70% goes back to AI. China's investing very heavily in AI.
Yes.
The young people are high-tech AI addicted. They're going to college for this stuff. They're not going to college like in the United States where I'm getting my degree in transgender studies. They're getting stuff that's really going to be beneficial. And they have 1.4 billion people versus what we have, a little over 340 million plus. You don't have to be good at math to figure this out. China's going to lead the world in AI. There's going to be a bust in the equity markets. There's going to be a dot-com bust 2.0, and as you well know, we had forecast that back in 1999. We said in the Trends Journal, in what used to be, now it's a weekly, it was a quarterly back then, that it'll bust by the second quarter of 2000. Same thing we're saying right now. There's going to be a bust by the second quarter of 2000, if not earlier. Of 2026. And when those markets go down, you're going to see gold and silver prices spike, even as they're spiking now. And by the way, as we go on the air today, silver was up $2.81. $2.81, selling at $66.49 an ounce. Gold was up over $30 an ounce, $4,335 an ounce. It was as high as $4,349. Now, go back to my podcast on October 16th. I said there's going to be a big correction in gold prices. This is a couple of days before gold hit $4,380. I said there's going to be a correction to some $500 that's going to go down, and it did.
Yes, it did.
Then we forecast that gold has to solidify in the high $4,260, $80 range and above for a couple of weeks. When it solidifies above that, it's going to go higher. So that's the way we're calling it. But again, now the wild card's in there. The dot-com bust 2.0 is really, and here's the other thing. Let's go back to December 2018, not ancient history. The Dow had its worst December since the Great Depression. What did Trump do? He was president back then. He forced Jerome Powell to lower interest rates. Yeah. He did it before, he's going to do it again. And Powell's going to be out of there. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up. This isn't rocket science.
Right.
Because it's cheaper for other countries to buy it. And as you well know, talking about gold and the gold standard, that slime ball, Richard Nixon, took us off the gold standard in 1971. And when you were here, I don't know if you remember, I showed you the photograph of me and John Connolly.
I do remember that.
John Connolly I have a picture of me, him, and his wife, Nellie, in front of the book depository. Connolly was the Democratic governor of Texas that took the bullet in the back, sitting in front of Kennedy. The Democratic governor of Texas became the Republican Treasury Secretary under Richard Nixon. As we're going back into the Anatole Hotel, he said, I read your book. And he wanted to meet me. That's why he wanted to meet me. He read my book, Trend Tracking. He said, it's a fine piece of work. And I know your heart's in the right place. He said, well, you don't have a clue what's going on. And neither do the American people. Because if they did, there'd be a revolution in this. This is the John Connolly that was the Treasury Secretary under Nixon that took us off the gold standard.
What Celente keeps returning to is the idea that the system didn't break overnight. It was redesigned over decades. He argues that the steady erosion of antitrust laws, the rise of corporate monopolies, and the explosion of debt have transformed what was once a we the people economy into one dominated by financial and military interests. The disappearance of small businesses and the hollowing out of the middle class are, in his view, direct consequences of endless government spending, permanent war, and currency dilution that quietly transfers wealth upward while living standards fall. From there, Celente warns that the next phase will be defined by crisis-driven resets. He believes inflated tech markets, mounting global tensions, and unsustainable debt levels will force authorities to respond with the same tools they always use: money creation, rule changes, and narrative control. History, he says, shows that desperate governments take desperate actions, including redefining wealth ownership after the fact. In that environment, gold becomes less about speculation and more about survival, while awareness and preparation become the only real advantages for individuals trying to stay ahead of a system that repeatedly rewards power and punishes trust.
And by the way, occupy peace close the bases overseas, bring home the troops, secure the homeland, and put them to work to rebuild our third world infrastructure. You've been around the world.
Yeah, the infrastructure, it seems like the third world countries are putting money into infrastructure, but those advanced economies, meh.
Look at take the subway in New York. It's a night in Calcutta.
Yeah.
All right, where I am in Kingston, you go to Rhinebeck, right across the river. From Rhinebeck, I could drive to Montreal. Takes 4.5 hours. 4.5 hours. My friend just went up there a couple of months ago. 10 hours each way. 10 hours up, 10 hours back on Amtrak.
So the infrastructure, well, what do you think? I mean, that means that there's a lot more people that are probably going to get hurt as the bridges or the infrastructure of the country just kind of implodes. They always talk about spending on infrastructure.
Put peanuts into it. Again, look at, you've been around the world. Look at the rail systems in China, Japan, Europe. I went down from Rhinebeck down to Philadelphia 2 years ago. The train driving like that in a crappy, little cafe or a little. You look at, you know me. I like the old jazz. There's a great song, "Take the A Train." I think it was Count Basie with Duke Ellington, one of them. And you could go online and they had the "Take the A Train." And there's the video. This is back in the early 41 or 40. And everybody's dressed. And the train, it looks like terrific. Take the A train, to Sugar Hill in Harlem. Yeah, not anymore. The A train's the crap train. It's disgusting. And again, another $1 trillion to our defense budget. And again, the way deregulated all the Glass-Steagall Act from the Sherman Antitrust Act, one act after another, the antitrust acts that they used to have in place. So this would be a country of we the people. It's gone. This is important about why the country's going down and why it's getting worse. Again, another almost $1 trillion for the military-industrial complex. Plus, when you put in the CIA, the NSA, and all the other ones, Homeland Security, it's way over that. But they won't tell us how much. Every gun that is made, every warship launched, every rocket fired signifies in the final sense a theft from those who hunger and are not fed, those who are cold and are not clothed. The world in arms is not spending money alone. It is spending the sweat of its labors, the genius of its scientists, the hopes of its children. This is not a way of life at all in any true sense. Under the cloud of war, it is humanity hanging on a cross of iron. Dwight D. Eisenhower, two-term president, back in the day, supreme commander of the Allied forces during World War II. He hated war and warned us what would happen, and that's exactly what's happened. The military-industrial complex owns this country. And in a country near you, you see what's going on. Again, we're right about it, what's going on in Germany, in France. And how all these companies are making so much money and the stocks are going up.
Right. They're making money. The central banks are devaluing the money that's out there. And so that makes everything. I mean, you've got corporations that are worth many, many trillions of dollars. But are they really worth trillions of dollars? Or is the dollar worth that much less?
Again, when you and I were younger, there were no such thing as venture capitalists.
Nope.
Private equity groups, hedge funds, did not exist. Again, you Google up, you get different numbers. BlackRock, State Street, and Vanguard, some of the numbers are almost up as high as they own 80% of the S&P 500.
Right.
I don't know what the exact number is, but the number's way up there. Three things that we've never heard of when we were young before. They own everything. And again, this thing's going to collapse like crazy. You say you got all this debt levels, and the AI thing, it's a joke. The debt levels that they have.
But
China's going to take over this thing. And there's going to be a dot-com bust, the likes of which we've never seen. This thing is way overinflated. And again, when you look at the real inflation numbers, they're much higher. When you look at the real debt level, it's much higher. They don't put in Social Security and all the other government debt into it. And it's going to collapse, and gold is going to skyrocket. Again, look at our top trend for 2024. I was on with you. Golden year for gold. Oh, it only went up 30% last year.
Well, it's still not to its fundamental value, but what do you think is going to happen? What are your predictions for 2026?
I told you. There's going to be the dot-com bust, Gen Z revolution are two of the big ones.
Well, that's
And war. When all else fails, they take it to war.
What many analysts are pointing to next is a shift from steady accumulation into a more emotional phase for gold and silver, where price moves stop being driven only by fundamentals and start being driven by fear. As debt expands, real interest rates stay under pressure, and confidence in paper assets weakens. Capital that once chased equities and bonds begins looking for safety instead of growth. Gold is expected to move first, acting as the signal that the system is under stress, while silver follows with sharper, faster moves as investment demand collides with tight physical supply. In this phase, pullbacks tend to be brief, sentiment can flip in days rather than months, and price action becomes more vertical as fewer sellers are willing to part with physical metal. Beyond that, the bigger move many expect comes when financial stress spills beyond markets and forces aggressive policy responses. Rate cuts, balance sheet expansion, and emergency liquidity programs tend to undermine currencies even further, reinforcing the appeal of assets that cannot be printed. Silver, because of its much smaller market size and its dual role as both money and an industrial input, often reacts with exaggerated upside once momentum takes hold, while gold continues to establish higher price floors as a reserve asset of last resort. In this environment, analysts increasingly see gold and silver transitioning from speculative trades into core protection assets, with prices reflecting not enthusiasm but a growing urgency to preserve purchasing power as confidence in the existing system erodes. Share your thoughts in the comments section below. If you found this insight useful, make sure to like, share, and spread this update to others watching the silver story unfold. Your support helps keep these deep dive analyses coming.